Time now for the word on Wall Street. Top investors are watching your money. Joining me now, Bolvin Wealth Management Group President Gina Bolvin. Also with me is Luke Lloyd. All right, Gina, we're going to start with you. Futures are higher on this Monday morning. We're looking for a lot of big tech numbers coming out this week. Alphabet, Tesla going to report Wednesday. The S&P 500 still hovering near record highs. We've been lifted by AI momentum and, of course, strong corporate performance. Crypto stocks moving higher this morning. Take a look at in particular Coinbase, Amara Holdings, two of the biggest players there. Those stocks substantially higher this morning. President Trump signed the Genius Act into law on Friday, helping create the first major framework for regulating stablecoins. Gina, we had a great discussion with Congressman Muser in the last hour about this. He was part of the push to get this signed into law on Friday. Your reaction to what really is history that was made on Friday afternoon at the White House, because now you have a true regulatory framework for the industry. And the argument that this strengthens the dollars, it strengthens U.S. Treasuries.
Absolutely. Hi, good morning, Cheryl. Thank you for having me. And definitely puts a plus in the column for anybody who owns Bitcoin. But I do agree with your earlier guest that said, I think the AI tailwind is more important and more strong. And I'm really focused on this week, what we're seeing with earnings. It's a really big week for earnings. And in order for stocks to move higher in the short term, we're going to have to see some upside surprise, and I think we could get there.
You know, it's interesting, though, Luke, I want to talk about the street even last week. I mean, it was a huge week. S&P 500, NASDAQ, notching all-time highs. Dow barely ended up in the red. But overall, this momentum is pretty incredible, Luke, considering that we're now at that 6-month mark under President Trump. And all of the tariff worries that we had back in April have faded. And that market freakout has faded. And look where are today. It's pretty. Do you think that's a bullish sign for the second half of 2025?
It is. And the bullish sign last week was all around the banks. And specifically, if you look at the banks, it was actually the investment banking side of things. And you can talk with, whether it's oil, you can talk about AI, tech, you can talk about all these different things. Investment banking seems to be rocking and rolling. And the cool thing there is that it's rocking even at these higher interest rates. I mean, usually investment banking happens when rates are low and you can borrow money cheaply to scoop up smaller companies. But it seems like this economy is really resilient, and it looks like it's being spread out the breadth with the whole market. Yeah,
and I remember looking at some of the earnings last week that we got from some of the banks, and in particular, I believe it was either Bank of America or Wells Fargo talked about that, more deals are coming, that there was a little bit of a lull when it came to IPOs and M&A and things like that, but that really these are more just kind of technical delays, and that there's a lot of deals in the pipeline that during this quarter right now. Let's take a look at oil this morning. Traders are certainly assessing the impact of these new EU sanctions on Russian supply, while they're also worried about Middle East producers raising their output. That could pressure oil lower. Maria asked Chevron Chairman and CEO Mike Wirth if softening oil prices are prompting any pullback in his business strategy. Watch this.
But, Mike, I mean, when you see oil prices decline and it's not as economically opportunistic for you, do you pull back? Do you not want to do the kind of activity that you would have done with oil prices at much higher levels?
We take a long-term view on prices, Maria, and the decisions we make, be it capital investment into our business or things like M&A, are not predicated on the price of the day or the movement we've seen over the last 6 months. They're really predicated on a long-term view of price through the cycles, and we look at the fundamentals that drive it: demand, supply, economic growth, population, technology, and we take a long-term view for those large decisions. And so whether prices come off or increase in the short term really has very little bearing on some of those bigger and longer term decisions that we have to face.
Very bullish comments there, Luke, from him.
Well, it's interesting that the oil markets are actually calling the bluffs from the EU right now. Because if we would have saw oil rise, that would say that the supply constraint would have happened if we're in Russia. So it doesn't really seem like that they're banking on that actually going through, or many supply constraints over in Europe at least. But I think this is actually bullish for the U.S. energy, because as you know, EU and Russia kind of fight back and forth about what's going on from a supply side, and then China's worried about the Middle East, maybe tensions rising with the Strait of Hormuz. Again, I don't know if that's going to happen again. I think this is actually advantageous for all of the U.S. oil, and especially with them so bullish about this M&A side with Hess. I think that tells you a lot. And then you have AI on top of that. There's so many tailwinds for energy. I think you should actually have a much heavier weighting of energy in your portfolio than the S&P 500 has a weighting.
Yeah, no, that Hess deal was historic. And again, another market positive. Gina Bolvin, it's great to see you. Thank you for being here, Gina.
Thank you.
All right. And Luke, you're going to stay with us all morning long. We've got a lot more coming up today.